Hey there, Audrey Hutton, your loan officer here, answering all questions related to supplemental tax bill. So we're going to talk about what it is and what you need to do when you get it. So what a supplemental tax bill is of course when you buy a home, the seller has a tax base that's different than yours because it's typically based on the value that you pay for the home. Everybody that buys a home doesn't pay the same price as the seller before them. So what that means is that after you buy the home and it gets recorded in your name, it takes sometimes quite a bit of time for the county to actually catch up to that new recording, update their records, and do an analysis as to the new tax bill for the new owner. So what that means is in between that time frame that it takes them to do that, they're still billing the new owner based on the seller's tax base. I know. We won't even go into how unorganized that is with the counties, okay? We won't even go there. It is what it is. So it's my job to prepare you for how things are and how this impacts you and what you can do about it. So basically that means if a seller had a higher tax base than you, then you're overpaying on taxes because the county's billing you on the seller's higher tax base. So until they catch up, when they realize that they've been billing you higher, they're gonna owe you some money. So hey, if you're buying in a market where your purchase price was lower than the seller's, you're gonna get a refund. However, most of the time, you have a seller that's owned the home for a couple years, it's gained equity, and then now you're the new homeowner. So basically, you're catching a break for however long it takes the county to catch up. So you're getting billed on the lower tax bill. So once that county catches up to you, they're gonna say, hey, you owe us some money from the time that you bought the home to now, and now we're ready to collect on that. So the county will issue you a supplemental tax bill. So it's a one-time tax bill that catches you up from the seller's tax base to what your new tax base is. So what can you do about this and how do you pay it? So if you do not have an impound account set up, then that means that you're just gonna pay that bill just how you normally would. It is separate from your normal tax bill. It will be very clear. It will say supplemental tax bill all over it. So just pay it. You can't get around it. You owe the money. Just pay the tax bill. So you'll never see it again once it's paid. Going forward, you'll just get your normal tax bills. If you do have an impound account, you have two options. One, if you get that supplemental tax bill, knowing that it is just a one-time catch-up bill, you can write a check for it, you can pay for it yourself out of your own funds, and that way your monthly payment will stay the same. It's just a bill that you're getting and you're paying it because it's a one-time catch-up bill. However, if you do not want to pay it out of the funds that you currently have, just contact loan servicing, and if you don't have that information, just reach out to us. We can definitely get you in contact with them and tell them, hey, I don't want to pay this tax bill out of my funds. Can we please have the impound account that I have set up pay this supplemental tax bill for me? And they'll let you know if it can be done or not. And if it can be done, just keep in mind that what that is going to do is that is going to increase the amount that they collect for impounds because they set that impound account based on your purchase price and your existing information that they know you're going to be billed on going forward. So if now you're increasing that to pay that one-time bill, then they will temporarily increase your monthly payment so that they have enough funds to pay that supplemental tax bill. And then in the future, they can correct it and adjust it down if they need to as well. So just keep in mind that it will impact your payment if you have your impound account pay that supplemental tax bill. So that's it. If you guys ever have questions, feel free to reach out to my team and I, but I think it is very important just to be aware because it's easy to forget. We've had the county send out a supplemental tax bill 2 months after a purchase, or in a very extreme case that I have seen, it was about 1.5 years, which is quite a long time. You're gonna forget that a supplemental tax bill is coming. So just keep this in mind. Know that when you get that supplemental tax bill, most people just pay it out of their own funds. Some people here and there request for the impound account to pay for it. Either way is fine, but just know that you'll never see it again once it's gone. Supplemental bill comes once and then you're done. And it's just the regular tax bills after that. So thanks so much. Hope this helped answer any questions that you have about supplemental tax bills. See you soon.